Good morning. It is Monday, September 29th, 2025. We hope everyone had a nice weekend. Happy that the storm kind of stayed off the coast here for the most part in Charleston. I had a really fun weekend. My 4-year-old, he's been trying to learn how to ride a bike for a while now. So it's been, I guess he's 4. I mean, that shouldn't come off bad, but we've been trying for a handful of weekends, and as many of you parents know, it finally clicks, and the balance and the pedals all kind of come together. So really fun to see him up on a bike. He was super excited. My daughter had a really nice soccer game as well. So good stuff in the Kroll house. It was a fun weekend. So last week, another great week of reviews. So we've 5 weeks in now with reviews, and this week we take kind of a break from reviews, and our whole team we're heading out to Phoenix for a tax planning conference. Those of you that work with our firm know that we put a really high emphasis on tax planning. To be more specific, like multi-year tax planning. Okay, so our team, we're going to go out there and try to learn a couple things. Just kind of based on the new tax bill, and again, always fun to learn some really high-level strategies to try to bring to you and to see what may or may not fit in each of your financial plans. So. Looking at markets last week, basically flat, maybe a wee bit lower, depending on the benchmark that you're tracking, but really better than expected economic data last week. All right, so we received the revised Q2 GDP, which was 3.8%, beating expectations. And really anytime you look at GDP, the important number you want to look at is the personal consumption, because that's what drives roughly 70% of economic growth. And that component also beat expectations at 2.5%. Okay, so that was great. Now on that, anytime at this stage of the economic cycle, anytime you have better than expected economic data, and I should mention that the jobs figure was the initial jobless claims was better than expected as well last week. So anytime you have better than expected economic data, it kind of works against the Fed being more accommodative, right? So good economic data equals an increasing probability that maybe the Fed will not be quite as accommodative, right? So on that, you saw interest rates, so yields increase, all right? So maybe not pricing in as many Fed cuts between now and the end of the year. So we'll see. The other thing I just wanted to point out that'll certainly, you'll see it in the headlines, right? So October 1st, so what day is that? That's Wednesday or Thursday this week. Kind of a pending government shutdown. Okay, they call it government shutdown, where if they can't figure out like the short-term funding, and this has happened a number of times in the past, right? The so-called non-essential parts of the government get shut down through furloughs and other things. With that being said, yes, many times it'll be some really scary headlines, but those of you that have kind of been watching markets and headlines for some time, historically speaking, these are usually like very short-term kind of non-events from a market standpoint. Okay, because at the end of the day, even if the government does shut down for a couple days or a week, again, the non-essential parts, you could see a very short-term like decline in economic growth. But usually that comes right back. So certainly discount some of those scary headlines. Usually the market sees right through it, but it could be a reason for some volatility this week. So we'll see. But question, comments, concerns, please don't hesitate to reach out to our team. And again, looking forward to tackling some reviews again starting next week. But and we'll be sure to follow up with everything we learn here in the week ahead. So have a great week. We'll talk to you soon. Thanks.